All right, so we spent most of the afternoon watching financial markets around the world. If you have a retirement fund or saving for your next big purchase, today was a bit unsettling. Markets closed an hour ago, and here's where things stand right now. The Dow and S&P 500 marked their worst day since 2022. The Dow plunged over 1,000 points, according to global market insight company FactSet. Now, that's just the 15th time that's happened. I'm joined now by Dewey Steffen. He's the CEO of Great Lakes Wealth, who can help shed some more light on what's happening right now. So first off, Dewey, how we get here?
Well, it's a pleasure to be here. Thank you for having me. And, number one, Wall Street hates uncertainty. And these are somewhat some uncertain times. It's been kind of going on for a while, but started maybe last week with the Federal Reserve. Not so certain about the economy. And then we had some economic data that came out on Friday, the unemployment report that wasn't settling either. And so here we are today with a follow-through.
So some financial experts are calling this a healthy correction. What can you tell us about that?
Yeah, we're kind of in that camp right now. A correction is when markets drop 10%, and the NASDAQ has dropped over 10%, and the S&P and the Dow are pretty much there as well. And again, that's healthy. Corrections happen. We're not saying it's over, and so again, we want you to be patient. Don't panic, but be aware.
But easy to say right now because all the articles all over the internet, globally, people are talking about this. What should urging investors not to panic right now? What should they be thinking about right now based on your expertise?
Yeah, I mean, this is common sense, but really know your situation. It's about you, your goals, your time frame, and your risk tolerance. And so really understand what it is you're trying to accomplish and invest accordingly.
Yeah, it's so easy when news like this comes out, people will rush to repair. What kind of advice could you give the regular, normal, everyday investor as they continue to watch this moving forward? Yeah,
don't think that it's over right away, and also don't think it's the end of the world. So always remember that cash is king. You can find cash paying 5% in high yield savings accounts, et cetera. So cash is king. And the next step for the Fed will probably be to reduce interest rates. And when rates go down, bonds go up. So we're also saying that bonds are back. So look for cash and bonds to be the ballast in your portfolio.
Yeah. Any perspective on what we may see in the coming days?
I would say that we'll continue to see the continued volatility. This isn't over. It's not just beginning, but it will continue. This is also a seasonal slowdown period. So volatility is here, but volatility creates opportunity.
And Dewey Steffen, on that, we're going to thank you so much for giving us that perspective, and hopefully you listen to this. So thank you so much for being here, Dewey.
My pleasure.
All right, thanks.